Welcome to the Hog Market Talk Podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is July 30th, bright and early before the 8:30 open here for commodities. I've got Luke Wells with us. How's it going today?
You know, Mike, we'll see how today's going. I tell you, this week's kind of been a whirlwind. Lots of stuff to talk about, lots of movements in these markets, eh?
You know, we were talking about what we were going to cover ahead of the podcast, and it was just...
The basket's big.
The basket's big, and it maybe not so much just revolving around only hogs, but by the time you combine everything that's happened across all of the egg commodities, just by last Friday, we were just going through the list. So last Friday at about 4 o'clock, it was announced that on August 24th, we were going to open the border between the U.S. and Mexico, at least Douglas, Arizona, and start allowing some feeder cattle, fat cattle back into the United States. So that development came out over the weekend. And then as the weekend moved on, we had a plethora of bearish items in the grain market. I've been arguing there's 4 things controlling the grain market, and all of them turned bearish over the weekend. You had China, who has been buying some things, but then Trump at the end of last week decided to come out with some tariffs, so they probably didn't like that increase. Then you had 2 wars that entered a ceasefire with each other. The Russia-Ukraine war ceasefire. You had the U.S. and Iran ceasefire. So bearish on both those fronts as well, commodity-wise. And then weather. Weather's been the big driver, especially for the row crop side of things. The forecast has turned quite bearish if you look out the next week to 2, even the next month. It seems like this could be a phenomenally different look on the grain market. So really all 4 of those things controlling the grain market turned bearish over the weekend, and really rough day, really rough start here really to the week. We've lost at least 60 cents on November soybeans since the start of the week. So kind of seasonally, it looks like we're running out of weather premium. And just end of the month, so there's probably a little bit of positioning at the end of July here, just with we've went up a lot in certain items like hogs or grain markets, and they've added a lot of fund longs on managed money here real recently. Probably a little bit of profit taking at the end of the month. And then last but not least, before we kind of get into the hog segment, would be just yesterday, I think it's no new story that we've got a new Fed chairman. And he had a press conference yesterday, Warsh did. And what we saw was incredible. Some people haven't seen this in their lifetimes that really know what they're talking about on this situation, right? But you've seen the U.S. dollar and 30-year yields really separate from each other. He may not have made a rate hike yesterday. He held steady. We didn't raise rates. It was a 30% chance. 1 in 3 people thought that we would raise rates in this meeting yesterday, and we held steady. But regardless, the market actually did. Watching live quotes after it came out, the bond markets did. So it was very interesting to watch yesterday's trade. Stock market did not like the uncertainty. Very interesting things going on in the outside markets as well. So if we just looked over the last few days, what I wanted to start this podcast with was immense volatility across a lot of equities, commodities, currencies, etc.
Absolutely. And I think we've seen a lot of that volatility. I think we've, and we'll continue to. I mean, just case in point, the U.S.-Iran conflict, which was on better terms Sunday night on the open. Mm-hmm. I mean, with drone attacks, counterattacks, it's midweek
now
here.
We're back into it.
And also crude responding, right? So a lot of geopolitical things, those aren't going to slow down. I mean, I think let's bring it back to the hogs, and we're having a pretty disappointing week in the hogs.
It was a rough day yesterday.
Yesterday was really rough. So, look at the hog complex. We have got a summer rally. Index is up around in that 98 and change. I mean, so we're moving higher. And the board, specifically the August board, had been holding some pretty significant premium as we continue to move higher. More larger than normal premium, like a negative $3 basis should have been a positive dollar basis, right? So anyway, like when August was trading at 103, another easy way to say that is, that means cutout needed to go to 109 or 110 to make that right at expiration. Okay. And what's been disappointing about this week is one, the premium in the August, and it was a big premium, right, and that's getting corrected quickly, right. But we as we kind of roll back, we've had some pretty, like last week's kill was significantly under a year ago harvest, but it was maybe numbers tightening, maybe, but it was largely slaughter disruptions. We had some plant breakdowns, right, and we started this week off with some of the same plants not running on Monday. My point with that is we product should have reacted to that.
Regardless of the reason for the shutdown,
Exactly.
product should have reacted.
So we were looking, and the market was looking for product to have a really good week, right? And my point with that is, yesterday's drop. We'll see if we can bounce back. But hams and bellies both had a.
That is a nasty chart on the ham chart when you look at that seasonally.
They had a bad day. They had a bad day. Now I will say two things. One, we are edging from a seasonality perspective. We do tend to go down here close to this time. It's a little early. We tend to get a little correction seasonally in hams and bellies. This felt early, right? But with that said, with these reduced slaughters, the market was looking for actually some appreciation in that. And the tone has been on meat and cash. Cash hogs like 102.50s, same as last week, above index. Cash tone, it's fine. You also had product, like it was trading in 104, 105. We had a pretty rough day. It's closer to 101 now, right? With yesterday's big drop, right? But like as we talk to meat traders, like people weren't talking problems up until yesterday. They like for August to be right, we needed to get cut out to go instead of 104, 105. It needed to push to 109, 110.
And this was the week it needed to happen.
It needed to go. It needed to go this week, and that's what's kind of intriguing about yesterday, because I mean it started going through the market yesterday that hams and bellies are in trouble, and the market traded it, and the 602 proved it out. Right?
Someone dumped a bunch of hams yesterday.
Someone dumped a bunch of hams yesterday, so we'll see how that all shakes out. But we've the kind of the tone again. The tone isn't okay. We're in trouble, but like. Things are fine. Like this next push, right, to make the August right, also to keep follow through. I mean, the ACH and DEES, if you look at those charts, the 100-day moving averages, around 88 and around 80, which we're now below that with yesterday's 250 drop, right? But those have been some spots we just haven't been able to push through. We needed that next leg and cut out to kind of push through. And yeah, this week it's got a little tough tone. So I'm really excited for the open today. I'm really excited for the meat trade today. See if we can kind of bounce back. I mean, that's the big question. Seasonally, we do get a little softness. It seems early on the seasonal. Did the seasonal start early? Did we just have some product dumping? A lot of questions to be answered. Today's trade, next week's trade is going to be really interesting. Bigger picture, pork stays, its value equation relative to other proteins is still very high. I still think we have some nice undertones to this market, and whatnot. But I think I started with this, and I think I'll end with this. Our summer rally came a little late. It's probably not going to kind of stick around as long. This rally we've had. If we get a bounce back, it's a good opportunity to shore up some kind of bookend, which I'd say Q4, Q1 type positions. Look at that, and then further out in the curve, just bigger picture. We've had lots of health challenges this year. We've offset those health challenges, one by making our existing production bigger, heavier carcasses. We've also imported more pigs from Canada. That's been part of the increase. That's worked in the market, right? But, looking into next summer, and further out, there's still some margins that can be protected. And if we don't have the health issues, we could easily have 1 or 2% more pigs. I don't think that comes from extra supply. I don't think the industry is growing yet, but that health delta, do we get that back under control? So anyway, case in point with that is continue to manage risk, stay focused on the forward curve. The clock's ticking on us a little bit here. We are approaching some seasonals, and we'll be next week's podcast. I think would be interesting to talk if we kind of bounce back from this, or this is kind of the seasonal turn lower. With some questions definitely on my mind and in the markets line. I will say we've also, though, we've got some discounts, into ACH and DEES, ACH at 85, DEES at 77. Even though the product might reset some, hams might fall some, that's normal. But if we take just normal declines, Hawk and Dees already have some of those discounts priced in, right? So you might see August was too high in our opinion. It had a lot of premium in it. That's resetting. Doesn't mean that Hawk and Dees have to reset kind of lower too, because we do have a nice demand structure under our pork. So there's maybe try to end on a little bit of a positive note here, but watch the margins, manage risk, and then like we talked about, a lot of volatility around on the inputs too, right? Just lots of things to keep our eyes focused on and protect our businesses.
That is very true. I am, from a margin perspective, I'm curious if you could try to get the row crop side here to continue its sell off a little bit earlier before, if we do happen to find some support in the hog market here over the next day or so. Yesterday should be respected as a warning, but if you get the grains and oil seeds to fall off here a little bit, there might be some opportunities in just margin as well.
Yeah, we can definitely pick up some margin on the input side, and we're this like you said, weather is a big deal, and this crop it needed. It was the point. It needs some moisture, and hopefully we'll kind of. I think the make overnight as we're starting to get some rain, but maybe a little. We need some showers to come through this afternoon would really be the big summation, right? Those things have to make, right?
In the Western Corn Belt, we are running out of time, that's for sure.
Yeah.
So it looks like we're going to get it, but
so
we've heard that
I tell you,
story.
after this podcast, we won't make our viewers, but you're going to do a rain dance, man. I'm going to hold you to it.
Yes, very much so. All right. Well, thank you for your time today, Luke. Everyone else, please click the link on the description below. Please subscribe to the channel for any other daily market commentary. Also got our crop tour starting this next week on Sunday. Please tune in on Twitter and our website to follow along. Thank you.